For more on all these new plans for Fannie and Freddie, we are joined by the man who once oversaw these mortgage giants. He is James Lockhart, and he is now Vice Chairman of Wilbur Ross. Thank you for joining us, sir.
Morning, Scott.
I want to hear what you think of the White House's proposals here and whether they'll go down with Congress.
Well, I think the proposals are good because they lay out as three options, and they certainly have taken nationalization off the table, which is good. But I think what one would have hoped is they would have gone a little farther towards the first option, if you will, and laid out a game plan how to get there.
Now, Timothy Geithner said 5 to 7 years as a timeline. Is that realistic?
It's realistic. It may take Congress a while to act. I would hope that they'd act this year, but it may take several years for them to even act. But I would again like to compress that time somewhat. It's important to help the housing market to get government slowly out of it.
The thing about the housing market, though, is that its recovery has lagged behind the overall recovery of the economy. We've seen housing kind of struggle to make any kind of sustainable gains. Do we go back to a situation where the government backing is implied, or explicit government backing, continue with that the way it is right now?
Well, I don't think long-term we should. I think for the next so many years, it may be as many as 5, we'll need some sort of catastrophic protection from the government. But I think, again, for a large portion of the mortgages that Fannie and Freddie are making, we shouldn't have that protection over time.
Peter Cook is in Washington. I know he has a couple of questions, too. Peter?
Jim Lockhart, good to see you. Let me ask you about the catastrophic, the option 2, because if you listen carefully to what the administration is saying, it sounds like that might be their preferred option. They haven't said that flatly. What's the downside of that catastrophic, the National Guard model, if you will?
Well, good morning, Peter. I think the downside is that we'll stay hooked on the government supporting the mortgage market. I think over time, I think that for the next so many years, that model will be needed. But I would like, at least over time, for higher mortgage limits, and for the wealthier people, we don't need Fannie and Freddie.
We're looking at a market right now where the 30-year fixed-rate mortgage has just pierced the 5% level. Psychologically important, in the grand scheme of things, still fairly low. Could mortgage rates, or should mortgage rates stay at these levels, these low levels, or will they at some point need to go back to the kinds of levels we saw before the housing boom, somewhere in the neighborhood of 7 to 8%? Well,
really, it will depend what happens to long-term treasuries more than what happens to the mortgage markets. There may be an extra cost put in the mortgage market, and over time we may see slightly higher mortgage rates. But overall, mortgage rates now are still pretty attractive rates.
Hey, Jim, this is Peter Cook again. Let me ask you, the taxpayers on the hook for $150 billion right now at Fannie and Freddie. Even if you take the Secretary's timetable 5 to 7 years, what do you think the ultimate price tag is going to be for taxpayers? How many more losses are we looking at?
Well, Fannie and Freddie's books that they've written the last couple of years are actually very, very good from all you can tell. There's certainly some losses to come, but we're certainly, in my mind, through the worst.
All right. Thank you so much for your thoughts. We really appreciate your coming on and giving us your instant reaction to all of this. James Lockhart, the Vice Chairman of W.L. Ross, former regulator of Fannie Mae and Freddie Mac.